Hey there, honest options traders. Today I want to talk about what my current strategies are when it comes to exiting a position. Let's get to it. Alright, the first thing we need to talk about is something that I call the implied volatility grade. Now around the internet it's sometimes called the IVR, that is the IV rank, and sometimes it's called the percentile, which I find a little confusing because there are some other things called the IV percentile that actually has different mathematics behind it. So for my own sanity, I've gone ahead and created something called the IVG, implied volatility grade, which will probably look familiar to you, and I think most people call this IVR. But again, for my own sanity, I call it IVG. And here's the math behind it. So it's the current IV less the 52-week low divided by the net between the high IV and the low IV over 52 weeks. Now I use the IV grade both to get into a position and then determine in some cases how to get out of a position. And I'll show you now on this following chart. These are the strategies I typically trade: verticals, iron condors, strangles, and naked puts, and then iron butterflies and straddles. So I get into some of these positions based on a variety of criteria, but one of them is the IV grade that I just talked about. The thing is how I get out can also be dependent on that IV grade. Now in the case of the verticals, iron condors and such, if the IVG was above 46%, then I'll simply exit at 50%. So that means I'll set my stop limit for 50% of the credit that I received, and then I'll exit when I get that purchase price. Now, if it's lower volatility, meaning that the IVG is in the 30 to 45% range, I'll actually depend my exit on that IVG. And then I'll add another 5% as a buffer. And the reason I do that is because since the IV is relatively lower than I'd like it to be, I don't want to stay in as long, meaning I want to exit earlier. For iron butterflies and straddles, I don't get in unless the IVG is above 50%, and I always get out at least at 75%. Now I say at least because you'll notice that there's this post 10-day increment column. And what that is are percentages that I add on to the exit after 10 days. So for example, if 10 days has passed and I still haven't exited, then I'm going to add another 2% to the 50%. So at day 11 I'd be at 52%, at day 12 I'd be at 54%, and so on. Now hopefully I'll exit before it gets too late, meaning before it hits expiration. And I have other strategies to deal with it when it does hit expiration. For the most part, I try to increase the percentage relatively quickly so I can just exit. I don't like to linger in positions. For something a little more concrete to hold on to, let's take an example of that 30 to 45% IVG range. Now, assuming that I got into the position at an IVG of 32%, then I would take 100% less 32, add an additional 5 on, and I'd get out at 73% of an initial credit. And I'd get out at 73% of the initial credit. The point is to make some money, get out, and redeploy the capital in another, hopefully better position. One definitely with a lot higher IVG. I think at 30% or above, there's reason to take some risks sometimes. So there you have it. These are my current exit strategies. I've been evolving them over time. For example, the post 10 days increment is something relatively new I've added, and I'm still working on finessing it out to seeing what actually works for me very well. And I'm keeping a record of all this information, and as it updates and I find things that work well for me, I'll let you know, honestly.